Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Everag's Global Insights team. And Steve, we're back this week with a bit of a rundown through some market changes that we're seeing. Of course, a little bit on the pulse. Big developments out of China that we wanted to talk about, a little rundown of global trade, and of course, chat of the week. Let's head into it.
Okay, so some interesting changes in the market. Not a lot, but here's the highlights. Certainly the butter market in Europe continues to rage. So we've seen the entire forward curve lift as seen here, and we've got short-term prices well above 7,000 euros a tonne. Concerns about milk supply or fat supply, demand holding up. So, supply side limits most of this story, but, demand is not yielding yet. So just what this does, there's some comparisons coming, but when we look at the seasonality of where prices are, the official numbers are yet to catch up with this. We're well above trend in terms of this time of year, obviously, but the shortages of supply have kept the butter value up. It usually dips around about now. We're just not seeing that yet.
Yeah, it's going to be interesting to see with New Zealand still maintaining a pretty strong advantage in the short term. It'll be interesting to see what happens in next week's GDT, Steve, whether we see a bit of a response in terms of butterfat pricing on the platform.
Yeah, we're already seeing general trade fall quite a bit in recent New Zealand data. We talked about that last week. So, yeah, that's in the background. When we look at skim milk powder looking forward, I guess the US market has been the one that's moved the most recently. And good question why. I mean, it's in similar territory further out to where the European market's got to. But it's mostly a supply side story, I think, in the short term in the US with carry just keeping it firm, but in similar trend to what New Zealand's futures look like. Can that hold up? Because the real market's trading on the green line there. There's some interesting developments coming. Let's see what GDT does again to inform this. The other big movement is in the short term with dry whey, and it seems there are some acute supply issues, shortages that have caused this to spike, but we've seen it rising for weeks now, but the last 3 weeks, quite a nice progression up that ladder. Short-term futures is the equivalent of $1,300 a tonne. In Q4, that's $375 a tonne on average, higher than where the EU market is yesterday. Wow. So it is a huge differential that's emerged. But it's not just in the short term, it's just moved the entire curve up. Is that sustainable?
That's right, yeah.
Joe, GDT pulse last night.
Yeah, not terribly interesting, really. Not much movement in whole milk powders. Just steadied with $5 gain to $3,100 a tonne. Not outstanding, but certainly, at least a steadying trend there. And for skim milk powder, we've just seen a $15 drop to $2,480 a tonne. So just a little bit weaker there. But again, GDT next week will be really interesting with some of those wider market developments. It'll be interesting to see who turns up and where it goes.
There's an interesting issue reported in China. Take us through what was said, Joe, because I think that's where we should start and look at the words carefully.
Yeah, so there was an announcement from the Chinese government in the last week just saying that they want to guide farms to optimise and adjust their herd structures, moderately eliminate old and low-yielding cows, and better match production development with market demand. So that's kind of the translation of what was said. And it's interesting in the context of dairy, but also other commodities, what this announcement means. Has there been a precedent for this, Steve?
Yeah, there's been several efforts in the past, concerted efforts to reduce the dairy herd for various reasons, but oversupply has been at the core of them mostly. We've seen several phases of that, some big numbers involved, and that's, could repeat itself here. We've also seen it in the pig industry. Sow number reduction has been a feature in the last year we're really getting back to, if you like, a balance. That's certainly what's happened in the pork market. And I think what we're talking about is a reset here. Is get production back to a base where you can efficiently grow or productively grow the herd from here and milk output. But yeah, we've certainly seen it before, Joe.
Yeah, but we were talking about that why. I mean, obviously the Chinese government has been a very strong advocate for self-sufficiency. It's had a number of programs to support larger farm production and eliminate some of the smaller farms where there were issues with contamination and the like back in 2008 when one of these kind of purges happened. It really does seem like a bit of a reset, doesn't it, to put these companies, we've heard for quite some time that the milk prices weren't sustainable. There was a lot of build-up of stocks. So it sounds like they are trying to reset the industry and put it on a more profitable footing from here. But in terms of what these cuts might mean, Steve, you've done a little bit of looking at what would be a meaningful reduction.
Yeah, based on the numbers we use in our modelling to essentially measure the supply chain and changes that we see along there. If we think about the fact that we aren't, this measure is not going to change the demand side. Fluid demand is languishing, and that's the biggest use of milk. It's expected to improve next year to, say 3 to 4%, say. So if we're going to get output back to a point where it balances that and reduces the excess manufacturing milk, which is really what's slowed the import side down, we need to cut output 4 to 5% in 2025 from what was achieved in 23. So that's a very big, that's a meaningful change. They've done that sort of thing in the past over a couple of years. So if they get going now, that's certainly certainly attainable. And they're, central government, they can do this. Just whether it's old and low yielding cows. We've had a program recently of taking those cows that were leaving old farms and putting them into the bigger herds, the bigger professional herds. But this may be a little difference where those cows exit the industry altogether rather than stick around. So whether they can reduce manufacturing milk sufficiently to support imports, that's the big question.
Yes, for us out here.
Yeah. As we watch this. So 1%, not going to do it. If it's got a bigger bite, it has to be of that nature. Will we learn that soon? That's the interesting thing. Just what emanates. These are the words from a Ministry of Ag official. So let's see what comes next. But that's the scale we need for a change.
Sure. So it's this real tension between the push for self-sufficiency and the need for these businesses to actually be profitable. The government's signalling they're not just going to let this ride. So in terms of those companies, Steve, just a bit of a shout out to our colleague Matt Gould at Everag. He likes to use this dairy company stock performance data just to remind us of the market's view of some of these companies. And we've got Mengniu, Inner Mongolia, Yili, who are dairy companies, and also China Modern, who is really a very large farming company. And you can see there, Steve, there hasn't been a huge response really to this announcement, or there hasn't been a huge response to what's been going on. It's just been pretty downward trajectory, hasn't it, over the last few weeks?
I think the two milk companies, Mengniu and Yili, are still struggling to get some traction on sales. And Modern's probably improving a little there because it's got probably some slowing of projects, and therefore the capital outlay is slowing down. It's sort of pulling back a bit, maybe giving a bit more confidence to get that into balance. But this is a good indicator to say, is the business improving in the eyes of Chinese investors and moving higher, because that's where the best rumours get picked up. So nothing yet. Let's see how this indicator plays out.
Sure.
Next few weeks. So quickly around global trade, Jo, the highlights.
Yeah, we're just seeing that trade is still down. For the latest month of May, milk solids equivalent terms, it's down 3.6% year on year, and that's a third consecutive month of decline. Not much growth when we look around the commodities here. It's really whole milk powder in the last 6 months that's done the heavy lifting. Increases in cheese, and also whey has come back fairly strongly in trade. But a lot of this trade was done in the early months of 2024, Steve, when traded prices were significantly lower than they are now. So we have seen a real slowdown in the last few months of data, haven't we?
Just looking at skim milk powder, which is critical to the global balance, I guess, of solids. While we did see earlier numbers looking very good, and we started to see, the worrying sign here, all those green bars pointing down now. Middle East has turned down as well, which we've been talking about for a fair while. Very strong trade into that region is starting to slow. Would appear to be well stocked, given that we've gone way past previous records. So, but in other markets, yes, we still see much softer trade. In cheese, while that was quite strong growth, we always pull apart where it's going to, and this difference between contestable markets and other or tied markets. So we usually show this on a rolling basis because it looks more dramatic. It's a real roller coaster ride. When you strip out the trends into monthly year-on-year changes, you could see starkly that these other markets, which are tied essentially to usually single suppliers, are doing most of the work here. But then where those markets are, so same colour system, the greens are the contestables, and they are offsetting, the growth in some of those markets, clearly offsetting what's going on in South Korea and Australia, which is most of the Oceania trade there. But it's the Mexico, North America, EU and UK which are continuing to grow. Now Mexico is, let's watch that carefully, because the trade into Mexico is vulnerable to the peso now, because that's weakened quite a bit. This is interesting to watch, of course, but with those developing markets start to turn around, we've seen Japan start to come back. So that's, cheese market's quite volatile. We may see this slow in coming trade data because of the, as you said, Joe, the rising prices.
Sure.
Okay, chart of the week. What have you got?
Chart of the week this week is American cheese stocks, Steve. And we've had some data out for June, and we've got a really small scale there, so it does look quite dramatic there. But stocks are down about 5.7% year on year. It's a slightly higher reduction month on month than we've seen previously, but there's been a very muted reaction in futures other than the very short term, Steve. American cheese output is also lower. It's coincidentally down 5.7% in May as well. So it's hard to see that anything's really changing rapidly, but just interesting to see these trends just ahead of the capacity that we keep talking about that will come online in the next couple of months, that those stocks are a little bit tight with some of those supply issues, and demand sort of doing okay, starting to come back. We'll see where that goes.
All right. Well, that's all we got this week. Thanks for watching. We'll be back next week.